Good afternoon, and thank you for joining us. How prepared are you for the future or unforeseen circumstances? Insurance and investing are two ways of preparing, but have you ever thought that they are a waste of time, that you don't need them, or perhaps you think that you can't afford them? If any of those thoughts have crossed your mind, then you are in the right place this afternoon because that myth could be costing you hundreds of thousands of US dollars. My name is Tonya Anita Elliott, Vice President Sales and Marketing at Sterling Asset Management, and I'm joined this afternoon by two distinguished gentlemen. I'm going to start with my far left. We have with us our guest panelist, which is Mr. Raymond Walker. He is the chairman, founder, and CEO of Caribbean Assurance Brokers. Good afternoon, Mr. Walker. Thank you for being here. And our Sterling panelist this afternoon is our very own Dwayne Neal, Assistant Vice President, Personal Financial Planning. Afternoon, Dwayne. These two gentlemen will be answering some frequently asked questions that we have been getting from our clients about investing and insurance, particularly international health insurance. We also want to take some live questions from you, our viewers, as well. So if you're joining us via Zoom, you can submit your questions throughout the webinar via the chat window. And if you're joining us on Facebook Live, Instagram Live, or YouTube, you can also submit your questions via those channels as well. And if time permits, we'll make every effort to get to those questions towards the end of this session this afternoon. All right, so I know that we have a lot of useful information to share, so I'm going to just get straight into the questions. Mr. Walker. Now, suppose, I'm a very wealthy person. I've been very diligent with my savings, and I've amassed quite a bit of US dollars in savings, hundreds of thousands. Why would I still need international health insurance?
Well, if you said you had amassed hundreds of millions, I could say that possibly you could go along without international health insurance. But international health insurance, based on the scope of the cover, is designed to cover almost any eventuality, and so almost any issue that you could be faced with. And so there are times when we encounter, and you will see later on, risks that are in excess of millions of US dollars. Our plan, for example, cover up to $2 million US dollars per year, and we have had a claim already that exceeded 2 million. So when somebody said, well, listen, I have hundreds of thousands of dollars and I don't really need international health insurance, then what the person is saying effectively is that I'm prepared to whatever happens that is going to cost that amount of money, then I'm prepared to die.
They can't afford to be sick then, basically. I know I've always heard that it's very expensive, that healthcare is very expensive, but do you have any statistics or numbers off the top of your head in terms of what the cost of being in the hospital might be, or cancer treatment, just so that people can really understand what we're talking about?
It varies based on the state, the hospital. There are some hospitals, for example, they target international clients, so they will do a lot of ads, a lot of advertisements in the international market to have persons come into their facility. And a lot of our clients, they're inclined to follow these ads. Mm-hmm. And it's not that these facilities, they are offering better standard of care than others. It's just that they're putting a lot of dollar into ads. And so in the case of our plan, we say to our clients that there is a need for you to pre-certify to get an idea where you're going. We have had instances, for example, one pregnancy, and this person went to a hospital in California, and this is a normal delivery, and that ran over $280,000.
Okay.
So I'll give you an idea.
Yes,
what we talk about.
Yeah, I get you. Yeah, we are all very susceptible to advertising, and sometimes because you know of a place, you think that it's the best, that's not always the case. For those of us who don't really understand, though, how does international health insurance work, and how does CAB is CAB able to offer that to their clients?
So international health insurance is, if you're accustomed to your local health insurance, it's pretty much the same concept. What is different is the scope of cover. So your local health insurance would typically, say, offer you up to 5 million Jamaican dollars per annum, some for a lifetime. In comparison to an international health insurance plan that would be offering you up to 2 million US dollars per annum. In terms of how CAB fits into the whole picture is that we guide our clients from the purchase right through to the claim. And so our clients, if a client has the need to use the plan, then the client can either contact us or the client can access care online. There are usually a lot of clients who they would prefer to have someone taking them through the process, guiding them through the process, and we are prepared to do that. We have our claims team, and this is distinct from the entity in Jamaica, Versac Limited, that is dealing with claims adjudication. We have our claims person separate and apart from that they will guide the clients to say, okay, this is what you need to do in terms of getting a pre-certification, and so on and so forth. Yes.
Okay. All right. Well, I mean, so having international health insurance, then they wouldn't have to dip into their savings. They wouldn't have to liquidate their assets, right? But of course, a lot of people, you still, people think that it's for the wealthy only. Would you say that that is true?
Not at all. In fact, if you cannot afford international health insurance or health insurance generally, then you cannot afford to be ill.
Okay.
That is really the plain fact of life.
Well, I mean, my imagination goes wild, and I always assume the premiums for these things are very high. But, what kind of numbers are we talking about for the premiums?
Now, it depends on the age of the person. It depends on the plan option. So, for example, 0 to 20 on one of our global share plan, the premium there would be in the region of $300-400 per annum. If you're looking at, say, 21 to 30 odd, the premium there would be maybe about $700 per annum. If you're looking at our global one plan, which is the top of the line, then for the 0 to 20, you'd be looking at maybe 900 and odd. And that is, I'm looking at the zero deductible option. That is, you're not required to go into your pocket for any claim anywhere in the world with the exception of the USA. So that plan will carry a zero deductible anywhere in the world, Jamaica, except the USA, where the deductible is $2,500.
Okay, so I mean, you briefly touched on something there. So is it that you can use the international health insurance here as well?
Here as well.
Okay.
Yes.
All right, well, on the lower end, the premiums didn't sound so bad, but I'm sure I've heard where premiums can get up to almost as much as $20,000 US.
Yes, so if you're in your 70s,
okay,
then your premium begins to, be right up there, as you said, in close to quite maybe about 15,000 or thereabout.
Okay.
Yeah.
All right. So on that end, it sounds a little bit unmanageable, and especially to somebody that age who would be retired. Are there ways that people can afford this? Are there financing options?
Well, yeah, there are finance companies, premium finance companies that they are in the business of providing premium financing for the clients, and a lot of our clients access those entities.
So, and CAB would refer and encourage that as well. Certainly, for those who think that it's unmanageable. Certainly. All right, well, I'm happy to hear that there are financing options available, because I do know that we have sterling clients who use the income from their portfolios to actually pay their premiums. That is another way. That's another way that people could also afford their insurance. So let's flip it now to the investment side a little bit, right? So same person, they think they have substantial US savings, they have it in their bank account, so they think that they'll be fine if anything were to happen to them. Dwayne, why would I still need to invest?
Well, like Mr. Walker started off by saying, unless you have millions, lots of millions of US, then it can get to a point where you can deplete. So it is good to actually have savings to begin with, but you also have to remember the factor of inflation. Simply put, inflation is the change in the price of goods and services over time. So goods and services tend to get more expensive. If you are not investing at a rate that is higher than the rate of inflation, then you are making negative returns. For somebody who is retired, who no longer gets an income, what you'll find is that a pool that you have in your savings account, you now have to dip into that to cover your expenses. So when you couple your expenditure with inflation, you might deplete that way quicker than you anticipated. So it's important for you to invest because you can find instruments that will give you a rate of return higher than the rate of inflation. And it also allows for income, and you can have your principal still intact without having to draw down on it periodically.
Okay, that's certainly a bank account would not be giving you the rate of return that you need. All right, and I mean, and you did mention that it would protect you from having to draw down on your principal. And another thing that a lot of people are not aware of is that you can actually borrow against your investment holdings.
Correct.
Right?
The whole principle of borrowing against your investment, your funds are still invested, it's still earning, so that will help to offset some of the interest costs from your borrowing.
Yeah. Yes, I actually had a client who, and that's something you can access quickly because sometimes investments or if you have your money tied up in real estate, you can't liquidate it quickly. And I had a client that had a heart attack and needed to get emergency treatment, go overseas for treatment. And he was able to borrow against his funds. He was in an investment that couldn't be liquidated right away. But he was able to borrow and go overseas. And I'm happy to say that he's still here with us and still a sterling client and eternally grateful. All right, so it certainly sounds like we need to do more than save, right? So if you want to retire comfortably, I have a 40-year-old attorney who has said to me that he's contributing to a pension plan and he thinks that that will serve him for retirement. Would you say that contributing to a Jamaican dollar pension plan is enough to support you in your retirement years?
Well, contributing to a Jamaican dollar pension plan, it does have its place in the grand scheme of retirement planning. However, it's important for us to look at the point of diversification. We also need to look at the effects of regulations in Jamaica. Pension plans are limited to how much they can invest in US dollars. They're capped at 20%. They're also regulated on what investments they can go into. If you had been contributing to a pension plan in back in 1982, the Jamaican dollar was at about $1.72 to $1 US. In December of 2019, the dollar was at $132.50 to $1 US. What you will find is that because 80% of your investment would have been in Jamaican dollars, you would have been losing value over the years based on devaluation. That works out to a rate of loss at about 12% per annum. So it makes sense to diversify. Look at other investment options that can give you US dollar investments. So you can look at unit trusts, mutual funds that will give you a better rate of return, outpace, and you can also diversify across different asset classes.
Okay, well, that actually answered the next question. We had somebody that was, saying, so is it advisable to only contribute to a pension plan? You've answered that it's not. So you have given us some examples, but elaborate a little bit more about what else could somebody invest in so that they can have a comfortable retirement.
Okay, so like I mentioned earlier, looking at unit trust type products, mutual funds, for example, Sterling's Global Fund, our mutual fund, on average has done 11% on US dollars since 2003 to present. That in itself would have allowed 100% exposure to US dollars. You would also be able to add to it at any point. I think a lot of people get comfortable with a pension plan because they don't necessarily have to think about, every month how much do I need to take out, how much do I need to contribute. But in this case, if you are making that conscious effort to prepare properly, then you can put things in place. And having that mutual fund or that unit trust can allow you greater growth and a larger lump sum at retirement.
Yeah, and you can treat it the same way. So, I mean, with a mutual fund unit trust, you can do an initial investment, but you can also add to it over time. So you can, just like how you're set up to have deductions from your salary, you could also set up to have regular deductions from your bank account to make it that same way where it's just automatic and you're not thinking about it.
Correct.
Earlier, you had mentioned about the restrictions on pension plans and what they can invest in, and that's something that a lot of people are not aware of. The limitations on how much US that the pension plans can invest in,
How much equities.
and how much equities, which could boost the return on the fund. So it sounds like there's some fine print there that people might not even realize about their pension plans. So speaking of fine print, health insurance companies, this is something I hear a lot from our clients, that they're always trying to get out of covering their expenses and that they just don't work, and they feel that there's a lot of fine print and hidden clauses. How can Caribbean Assurance Brokers help somebody to avoid that?
Okay, well, it is always advisable that when you're dealing with any form of health insurance, more so international health insurance, that you have a quote-unquote good broker. And that is a broker who will advocate on your behalf. Now, the broker has a fiduciary responsibility to ensure that there is no fraudulent claims. And so we will make sure that the claim is a just claim, and if the insurer refuses to pay the claim, then we will do everything possible to ensure that they pay and that the client gets what the client deserves. Now, Caribbean Assurance Brokers is, I should say, above the rest from the standpoint that we are the only insurance broker. I'm aware of that. We have a patent as well as we have a patent on the iChip. And as such, the product is not owned by the insurer. Over the years, we have moved our plan from one insurer to the next simply because of issues that we have had with respect to insurer trying to avoid paying large claims. Usually when a claim is in excess of $1 million, you have. This is where the broker really comes in, and the broker has to show his worth to the client in terms of advocating on their behalf. So while others, they may not be able to literally, quote unquote, fight on behalf of their client, we can, because in the case of the others, the insurer may just say, listen, we are going to terminate your contract as a broker, and we will not be paying this claim, and of course, they're off. The broker loses his clients because the clients are going to go wherever the insurance is taking them for the most part. In our case, we take our product and we get another insurer to insure the product. And we have had that at least 2 occasions.
Okay, so, but I imagine also there's some responsibility on the client side as well to be
Certainly.
very upfront in terms of what any pre-existing conditions, and that certainly will make the process a lot smoother.
Yeah, we say to our clients, listen, you need to disclose everything. And in other words, if you have had something, disclose it. And once you have disclosed the information, then you have no problem whatsoever in terms of claims and dealing with claims.
Okay. Well, to move slightly away from the international health insurance, we've been thinking about our mortality a lot, right? We're in a pandemic right now, and we're losing people. You're facing your own mortality. So, other than worrying about yourself and what happens if you get ill,
Right.
how can insurance help you if something were to happen to you, we are unable to work, how can it help your family?
Yes, so there are different types of insurance. So you have life insurance, where a life insurance policy can do several things. One, the life insurance can protect your family. We call it family protection. In the event of your untimely demise, then you have funds that will be available to your spouse, your significant other, your children, to ensure that they have all the plans that you had in place for them. All of those plans are realized because the funds will be there to deal with that. You also have situations where you may be in a business, you have a partner, and you would like to be in a position where, in the event of the untimely demise of your partner, the company would be in a position to pay the partner's stake in the organization to the person's beneficiary. And so an insurance policy would facilitate that. And this is why, for example, we talk about, and also in the case of if you have a key person, you're a new organization, a young organization, you have some key persons within the organization, you'd like to be in a position, if that person should die, then the organization would have the funds necessary to get someone to replace that person. Maybe not fully, but then at least for a period of time. So when you look at all there, and there are several ways in which insurance can help, whether it be in the case of a business or in the case of your family. And those are just a few.
Yeah. And I imagine there are some insurance policies that can help you pay off debts, personal debts as well, and maybe even provide for your children's education.
Absolutely. So you have, for example, once you're taking out a loan, usually the bank or the mortgage company will say, well, we need insurance to in the event that you died unexpectedly. Then you would take out the insurance to the extent of the loan, right? And that insurance would be assigned to the entity, the financial institution, so that if you died tomorrow morning, that loan would be taken care of. Your family is not left in debt. Yeah.
All right, well, that certainly hopefully gives people a lot of peace of mind. So Dwayne, back to you now. You're not just accumulating. You had said it's important to invest, not just contribute to a pension plan or to save. But what about people who say that interest rates are so low right now? Does it make any sense to invest? Investing is a waste of time.
Well, the reality is interest rates are low. They have been low for some time now, and we project that they will continue to be low for some time to come. However, there are options available for persons looking to invest to earn rates that are higher than a savings account rate or just a regular repurchase agreement rate. Persons can look at things like structured notes, like we said before, mutual funds, that can actually give you more attractive returns. It's, however, important to match your risk appetite with the investment products that you're going into. So get the details of these products, not just look at the interest rates because those are high. Also, persons can look at options that will not only give you a fixed rate of interest, but can also give you capital appreciation. So, for example, some of the bonds in the market now might be priced attractively with the potential for upward price movement. So if you can lock in your interest rate and have the potential for price movement, then, it's a win-win situation.
But what about like business people? I know that a lot of people who own their own business, they just think that they should just put everything back into the business. I mean, that is a form of investing.
Sure.
But what would you say to somebody who just thinks that if they put everything into the business, if something happens, they would be okay?
It's just like what I would tell any other investor. Investing in your business is one form of investing, but diversification is still key. Your business might be doing well now. We don't know what could happen given the current global
we've seen it.
crisis. Yeah, we've seen it. And so having several income streams, not just from the business, but from your investments as well, can help in that regard. So if business should slow down, you'll still have income coming in from other sources. So.
Okay, that's true. I remember I have a client, he's a business owner, but he also invests with us. And he was saying to me that he was so grateful. His business had to actually shut down for a couple months during the height of COVID last year. And he was so grateful that he was able to still come and collect his interest checks from his bonds, you know. So again, that's the importance of diversifying. You know, he didn't just have income coming from one place, and I can't imagine what would have happened otherwise. All right, so I mean, those are the questions we got in initially, but I do believe we might have some questions coming in as well from Zoom or from Facebook Live, Instagram. So the first one I'm seeing here is, I am self-employed. I'm an HR consultant. Is it possible for me to still get insurance? And how expensive is it? I'm assuming that's probably health insurance you're talking about. Okay. Because people think that if you're not, you know, registered with working with an institution, you can't. Right.
So, because this is a self-employed person, he or she may not be able to be a part of an employee, you know, typical employee benefit scheme. However, we have several options available. We mentioned the iChip earlier. We spoke about the iChip earlier on, and that is a plan that's designed for individuals, companies, families, etc. In addition to that, we do have our credit union gold series, and this is a plan that it's extremely reasonable. Persons can access the product through their credit union. They just simply, once they're a member of a credit union, they go and they can purchase this plan from the credit union. The plan offers 3 types of cover under one. So you're covered for health, you're covered for life, and you are covered for personal accident. And when I say personal accident, to give you an idea, we're talking about, it's not just a question if you lose a limb, etc. We're also talking about if you lose your job. Then the plan would, in fact, as a result of an accident, then the plan would actually pay you up to $25,000 per week. 25,000 Jamaican dollars, that is, paid for a week. So since we've been talking about US so far, I just want to make sure, right? But it's a very good plan, and we are actually encouraging a lot of younger business persons, because I know since COVID, a lot of young people have gone into their own business. They've either been out, they set up, buy a car, set up a taxi operation. They are exposed because they're out there, and they would therefore benefit significantly from the this plan in terms of personal accident cover. So if God forbids there's an accident, then at least they would have that income, you know, for up to a year.
Okay.
Yeah.
All right. So I guess this person was listening earlier when I asked you the question about whether insurance, international health insurance, is just for rich people. Because though this person is saying investing is only for rich people. What advice do you have for someone who wants to start investing, but they don't have enough money or perhaps don't qualify for particular types of investments?
Well, the best advice I could give is to start small and grow. So start by saving. Save what you can accumulate. Find out what the minimums are for various investment products. They will vary. So somebody who maybe wants to start on the smaller end, you can get into the stock market. You can buy stocks on the local stock exchange. Sometimes you'll have an IPO where you can go in with a few $1,000s. Start there, keep adding periodically and growing over time. The compounding effect is what a lot of us ignore. We need to look at the fact that we start now. Some of us will start now and we never invest again for another 10 years. Try to make it a habit that is a continuous investment and grow over time.
Okay. Well, what about, there's some investments that have particular qualifying criteria.
Well, there are some limitations in terms of what investments individuals can get into. So I know one of the questions we get asked a lot, it's about being an accredited investor. What an accredited investor is, there are two criteria for individuals. One would be that you earn 10 million per year for each of the last 2 years. The second would be that you have a net asset value of 50 million or more. A young professional may not have meet any of those criteria. What they can do is to look for a family member or a trusted friend who you can partner with, who will have assets, who can assist you to get to that minimum criteria and begin from there. So there are ways to get into investing without starting with this big lump sum.
Yeah, so you can partner with friends or family and pool your income and pool your assets to meet that criteria. All right. This question says, is it true that insurance premiums are rising during COVID?
Well, not really. Our premium remained from the COVID started 2019, and we have not had an increase in our rates at our last renewal in August. We certainly didn't have any renewal in rates, but I know that because of the impact of COVID on certain types of insurance, you will see increases in rates for those type plans. But it would not necessarily apply across the board to all types of insurance.
Okay. Well, that's good advertising for CAB then, right? Because if that's the case that people are thinking, and CAB is saying that you said you haven't had to raise your premiums. No. Okay. All right. Well, we did say we wanted to keep it short because we know it's after lunchtime and we know what happens after you have a meal. But we hope that information that we've shared has been interesting and has kept you alert and reinvigorated you for the remainder of the afternoon. So we're sorry we were not able to get to all of your live questions, but you can always redirect your questions your investment questions to the Sterling team. Our email address is info@sterlingasset.net.jm. And if you have any insurance questions, you can certainly direct them to the CAB team. I'm sure they'll be happy to answer those for you. Their email address is info@cabjm.com. So if I had to say there was a key takeaway from this afternoon, what I got from both you gentlemen is that if you think that just saving would be enough, that's all you need to do, insurance and investments are a waste of time, then you need to think again. Because as Dwayne pointed out, your savings are finite. Things like inflation, devaluation, if you have to do periodic drawdowns on your savings to fund your retirement years, then eventually your savings are going to be depleted. And of course, a terminal illness could just deplete your savings just like that. So it is important for you to use a combination of insurance and investments to protect your savings and grow your savings. The cost of living is high, the cost of being sick is high. So if you have those two things protecting you, then you will have that peace of mind, and that peace of mind will be priceless. So thank you for joining us. We hope you found the information useful and that you'll join us for our future webinars. Thank you and have a great afternoon.